Well, there is some concern about just how much of a premium over the normal unemployment insurance the administration, the Congress, will be providing. The talk had been for an enhancement over and above the normal insurance of about $400. Now, if it comes in materially below that, certainly there's an incentive to look for work, but this is all occurring at a time when the economy's recovery, the outlook is becoming increasingly fragile, increasingly uncertain as the second wave infection begins to show signs of slowing economic growth. So we're at a fine point, and that's certainly one of several uncertainties in the outlook facing the market during the balance of the year.
Gary, it's important to understand whether or not the market has more potential upside from here, or do you think a large part of the move has already been priced in, and so now the market looks ripe for a correction and is looking for reasons for that correction to come?
Well, I don't think we're there yet. Certainly, the uncertainty about the growth recovery, the strength of the growth recovery is out there. We still think there is some upside potential. The midpoint to our range for year-end 2020 is not too far above where we are now, but it does leave room for continued gains. We're continuing to get support from the Federal Reserve. Low interest rates are allowing the market to accommodate higher valuations. And while we do see growth losing momentum, we're not looking for the economy to roll into another recession. We don't see the kind of lockdown in the economy, even though the reopenings have been disrupted, the kind of lockdown that contributed to those steep declines last spring. So we're still reasonably encouraged, but we are taking a cautious approach in our strategy, continuing to focus on those growth stocks, large cap, high quality growth stocks, where earnings are resilient to the kind of growth slowdown that we may see in the months ahead.
Sure. What about contrarian bets in this market? Are there any?
Well, I think so. Certainly as economic growth does at times show signs of picking up, we did see value stocks periodically gain strength. And certainly we could see that develop if the economic environment begins to improve or holds where it is and doesn't erode as many think it will. But at the moment, it's really more stop and go. We did see value and cyclically sensitive stocks have their day at times over the last couple of weeks. Be more of a headwind, however, if the growth outlook does continue to weaken.